Hello and welcome to Livewire Markets Income Series for 2025. My name's Tom Richardson and today I'm sitting down with Ofer Karliner, the co-portfolio manager for the Magellan Infrastructure Fund. He's going to talk to us about how he generates income for the fund and how he thinks about markets today. Ofer, welcome.
Hi Tom.
Okay, first up, we've got Australian shares, US shares, European shares, all at record highs. Do you think these valuations are justified?
From an infrastructure point of view, we see valuations as pretty mixed across the world. We still see Europe as cheap. It started the year as very cheap. Obviously, we saw a rotation into defensives, in particular European defensives. That gap's closed a bit. We still see, again, it was screamingly cheap at the start of the year. It's still cheap now. And there's certain pockets are still very cheap. So UK waters, for example. Across the rest of the world, I'd say it's probably close to fair value. Again, pockets of undervaluation, broadly fair value across the world.
You've said higher interest rates can hurt the valuations of infrastructure businesses. At the moment, we've got forecasts for rate cuts. So is that a positive for your portfolio?
Yeah, I'd start by saying that interest rates, like nominal interest rates, really shouldn't matter that much. It's the real rates that matter, so inflation adjusted. That said, the market reacts to nominal rates. So all those equal, rates falling is certainly beneficial for infrastructure as a sector. The lower cost of debt, etc., certainly is helpful, plus the lower discount rate. So yeah, it certainly will be supportive of the sector going forward. It's also important to think about why rates are falling though. So to the extent rates are falling because we see economic weakness, infrastructure should do particularly well, given the kind of business we invest in, very robust cash flows with really profound competitive advantages. It means the cash flows are going to be pretty stable through all that noise, and you get the benefit of falling rates.
And inflation, we've all seen that's definitely cooling in the US and Australia, but it's not gone away. Is the portfolio inflation proof?
From an inflation point of view, generally it's very well protected. In fact, you can actually benefit from short-term spikes in inflation. Your tolls go up, for example, but your debt generally fixed for broadly 10 years, give or take, across the portfolio. It's the second order effects that really hurt you. So to the extent that inflation gets embedded, then you see real rates start to push up and that's where you get hurt. But inflation itself is a pass-through for most infrastructure businesses.
Okay, we can talk about the portfolio a bit. You own a lot of European stocks. There's been a lot of talk that US exceptionalism is over. So what's your view? Are the best days for US share markets gone?
Yeah. The European decision is really bottom-up driven. It's where we see value. As I mentioned before, we see a lot of value in Europe. When European exceptionalism as a term was sort of bandied about last year, my internal bubble alarm bells started going off. Much like New Paradigm in the early 2000s, when people talk about tech stocks as people trying to justify buying things that are expensive. That said, US is a broad, deep, dynamic market. That hasn't gone away. I think there's confidence has been shaken by the vacillations of policy from the Trump administration. As we move through that, I think the US will return in strength.
Mm-hmm. And you say in your last annual report that the portfolio is exposed to structural growth that could enhance returns for investors. What do you mean by that?
So there's a number of different vectors where structural growth is really helping the infrastructure space. Most obviously population growth helps. The simplest level of toll road, more population, more people are driving, therefore more trips on the road. But you also think about an underlying level, governments build toll roads because the existing roads are full. No one really likes toll roads, unless you're an infrastructure nerd like myself. So ultimately what it means is the toll road can grow above system for a very long period of time. Like I was an airport, population growth helps, but also increasing wealth helps. So rising middle class means more people have discretionary income, more people can travel. That helps growing passenger numbers through time. If you look at other sectors like mobile phone towers, increasing data usage on phones, so think about how you used your phone 10, 15 years ago versus how you use it today. All that additional data needs more antennas on towers. So that's a structural growth theme that runs through the portfolios. From a utilities point of view, you have the transition to renewable energy, and all that entails in terms of additional T&D, hardening the grids, etc. Data centre growth, load growth, which hasn't been in existence for a number of years now. We've actually seen efficiency mean load growth's been pretty flat for a number of years. All that means investment, and investment leads to earnings growth, and it's a structural story that will last decades.
Are there any toll roads or utility businesses you want to talk about?
Obviously Transurban is one of the keys that we see. It has a an exceptional suite of assets across Australia in particular, has some in the US as well. Really advantaged positions, long-term contract life, option value as well. We don't think about that a lot, but when you're the owner of a toll road and the government wants to do something that touches the toll road, often you're the only person who can do it. A widening, for example, or you see North Connects in Sydney that was built via toll increases on the M7. So there are different ways you can get option value inherent in a toll road that you can't get from being outside that sphere.
We all have to pay higher tolls every year. Is there increase in tolls? Is that index linked to inflation?
It's generally linked to inflation in most cases, or has a minimum threshold.
So that helps them drive income
Correct.
to investors?
So they're either 4.1% or inflation. That helps grow the earnings, and obviously that drops through the bottom line and through dividends ultimately.
Okay, this is an income series. Infrastructure sector is well known for income generation. Why is the sector so good for income?
Think about what the businesses are. They're highly cash flow generative, which comes from being in a position where you're very structurally advantaged either through regulation or profound competitive advantage position. You're a monopoly or oligopoly. So Transurban's a monopoly on the roads they own, for example. That means you are able to control your costs. You're not exposed to competition, and you can use that income and ultimately pay your unit holders or shareholders a really reliable income stream coming through time. Importantly, that income stream is also very robust. So again, to the extent you face a downturn in economic conditions, you don't have the fall in demand that the general industrial company would have. Your cash flows aren't as affected, and therefore you can really maintain and have a lot of confidence in that income coming through.
You deal with risk for a living. What's the riskiest thing you've ever done outside of investing or work?
Yeah. First of all, caveat, so my wife knows that since we had kids, my risk tolerance has gone down a lot. But when I was young, I was a bit of a thrill seeker. I jumped out of planes, I bungee jumped, I raced cars. Probably the riskiest thing I've ever done, probably the stupidest thing I've ever done is I went rock climbing in Greece with a few random people that I met at a hostel without safety equipment. In that process, I caused a little rock slide where I still had a dent in my shin where the rock fell and hit me in the leg, but that's probably the riskiest thing I've ever done and clearly the most stupid thing I've ever done, but I've grown up since then a bit.
So scarier than the markets? Or?
Yeah, at the time it was, but when you're 20 and you're bulletproof, things you do are pretty amazing.
Sure. Okay, thank you very much.
No worries.
If you'd like to see more content like that, please visit our Livewire income series for 2025 or visit our YouTube channel.